If you've been trading for a really long time and you're still struggling to get the consistent success that you want, it's probably because you haven't learned the lesson I'm about to teach you right now. This is the final lesson of our Masterclass series, Market Psychology, Engineering Your Success. The way you're going to win in the markets is by having rock solid confidence in your own abilities and also in the strategy that you're implementing. So how do we go about building confidence? Well, most traders just jump from strategy to strategy, finding the best one that gives them the best positive reinforcement, a feedback loop, which is okay. The problem is that they're normally practicing a strategy that's used by the masses that's not really good in the long term. And another thing is that a lot of traders self-sabotage along the way, which we're going to cover here in a moment. Now, what I'm going to propose to you is that we look at this from a standpoint of engineering confidence, meaning our strategy and our approach is set up in a way that easily creates a positive feedback loop that by default builds our confidence. This is the platform that you need to succeed long term. So let's start off by talking about what steals confidence. Now, confidence stealers can be not making positive progress. That's a given. If we're not moving forward, we're not going to feel confident. If we lose too much money, especially at one time, that's definitely going to kick in our confidence. If we're always swinging for the fences on every single trade, that's also going to cut down our win rate, because most trades are not going to go as far as we would like them to. But in reality, we could take a lot of base hits along the way if we would just take them. So what's the formula to fix this? How do we actually engineer confidence from the get-go? Well, we adopt a confidence-boosting, high-probability system. What does this mean? You engineer an easy win strategy and approach. This includes unemotional position sizing, which AKA means small position sizing. You trade in trend, get probability in your favor from the trend. You take base hits along the way, and you use this formula to build a solid platform of confidence that you can scale up on. Will you trade this way forever? No, but this is where it starts. This is where you get extremely confident in your abilities, and most importantly, you stop losing money like most of the other traders, and you just start making those incremental gains. I'm going to teach you how to exactly do that through the rest of this lesson. I want to quickly introduce you to a concept that you may have heard before or maybe not. I didn't make this up, but when I first heard this concept, it was kind of mind-blowing for me, because I thought this really explains why traders waste so much time when they're trying to learn how to trade. It's called the trader's losing cycle. And this losing cycle starts with a new strategy. As traders have their new strategy, they eventually want to start actually backtesting it or trading it on a demo is usually what they'll do. So the problem with demo trading is that there's no pain or emotion really associated with demo trading. So, you're not going to get a real effect of actually watching live money in the markets. But either way, they're testing the strategy. And what I've seen with a lot of traders over the years is that they will look at all the good trades that happened in that backtesting or when they're demo trading it, and they'll say, look how good the strategy is. But then they might be demo trading it, and then some bad trades would come along, or they pick the wrong trades in the strategy. They don't follow the criteria perfectly. And then they say things like, well, I would never do that if it were a real account. And they kind of write it off. So that gives them this false kind of expectation that this is going to have positive results. So they end up thinking that this is going to be a positive result strategy. That eventually leads them to actually get a real trading account because they want to start making money with the strategy, right? But inevitably, the pressure of trading real money, the real emotion, combined with the strategy that they were doing probably isn't actually a good one long term. It eventually leads to losses. That leads to loss of confidence, which leads to them saying, it's not me, must be the strategy. The strategy is bad. So they abandon the strategy, which then takes them back into the whole realm of tweaking settings, more back testing, so they can do what? They can then find a new strategy, and it starts over and over and over again. So most traders are in this loop for a really, really long time. The question is, how do we get out of the losing cycle? Enter the winner's curve. This is a cycle that all traders want to be on. It also starts with a new strategy. We always got to learn, what are we going to do in the market? What's going to be our criteria? Then we do want to do some back testing. We want to do some demo trading to get familiar with that strategy. We want to see positive results, not imagined. Then we want to go to real account trading. Then we want to experience wins in a real account. Then that will lead to a real boost in confidence, which then takes us to the inner part of the circle, consistent execution. When we have consistent execution, we will continue to get wins, which will be more positive results, which leads to a bigger boost of confidence. And then that leads to profitability and scaling up. That's where it actually has a very positive feedback loop for the long term. Now, here's the key. This is what makes this different than the losing trader cycle. The key is engineering your strategy and your approach to make sure this happens. Traders don't start from, this is my priority to make sure I have a positive feedback loop. All they look at is, what strategy can make me the money the quickest? It's, how can I get rich quick? This is engineering your approach to make sure that you start out in a positive feedback loop cycle from the beginning. And then with that positive confidence boosting, positive reinforcement system, you have the ability to scale up and actually make more money over time and avoid all the losses and pain that other traders are constantly experiencing. So the question becomes, how can you program yourself for automatic good trading? How can you purposefully engineer your trading approach and strategy to build successful habits on a subconscious level? And subconscious means that you don't even think about it. You make good trading happen naturally. How do we do that? And the key is understanding how you are programmed in the first place. Welcome to anchors and triggers. This is an extremely important concept that you need to learn if you want to be not only a good trader, but you actually want to take control of your life in general. So anchors and triggers are the reason that we feel and act the way we do in different environments and situations. Anchors can be positive, they could be neutral, or they could be negative. Anchors become automatic programs that control our state of mind. An example of a positive anchor would be, it's a beautiful day outside. If you see that it's a beautiful day, maybe that'll put you in the mood to go for a run. And every time it's a beautiful day, it's like, I want to get outside, I want to run, I want to do something active, right? That's a positive anchor. A neutral anchor could be, maybe you're just in your house and it feels hot. You're like, oh, I'm a little hot. And that runs a program to then go turn on the air conditioning. That's neutral. It's not good, bad. You're just getting comfortable again, right? A negative anchor could be, you feel stressed. Why are you stressed? Maybe you got a bad phone call. Maybe someone said something to you at your job. Maybe someone cut you off while you're driving, whatever it is. But that triggered you to feel stressed or angry. And then that can trigger the program or the response of maybe overeating or drinking or going towards some other vice you may have or be dealing with. That would be a negative anchor. So let's talk about anchors translated into trading. How we trade influences the type of anchors and associations that we form on a subconscious level. If we're not careful and trade the wrong strategy carelessly, we will anchor automatic feelings of loss and stress that will dominate our mindset. If you've been trading for a while and when you execute a trade, you immediately kind of feel sick about it, chances are you're suffering from negative anchors in your trading, meaning that you've suffered so many losses and you've had bad trading behavior for so long, it's literally programmed into your subconscious that trading itself represents something stressful and bad. That's what we want to fix, and I'm going to teach you how to fix that through the rest of this lesson. Now that we know what anchors and triggers are, what comes after that is our reactions, and our reactions are based on our programming. So let's talk about how programs are made, specifically a new program. A new program is going to start with something unique, and that's going to be a unique external stimulus, a unique internal thought or picture in our mind, or it could be a unique feeling, and these could be emotional and physical feelings. It's going to be something new that then commands our focus or our attention. When we focus on it, we are then going to think of, what does this remind me of? Do I have any prior feelings that would help me shed some light on what this means? That we have thoughts, we have words, we have these different things that we're thinking about, and we're going through this cycle in our mind, all for one reason, to figure out, what does this mean? We have this new unique feeling. So to command our focus, we're going to think about it, and we're going to come up with a meaning or a belief. That meaning or belief could be positive or negative, but when we have a new belief, that is going to cause our outputs, which are our actions. That creates our state or our temperament, makes us feel good or bad. That controls our actions and reactions physically. It controls ultimately our personality traits. Depending on the meanings and the beliefs that we hold in life, that affects who we are as a person, how we show up day to day in the situations that we face. And this all together, who we are as a person based on our programming, controls our results. As traders, we want good results. So it would make sense that we have as many good programs as possible. So let's look at a consolidated unconscious sequence as we experience it in our day-to-day life. We have familiar triggers. We all have these. We get in the car, we go to work, we get phone calls from family, we have all these things that we face on a day-to-day life, and those things take our focus, and then we run the program associated with that familiar trigger, and then that creates a familiar output. So this is how we are all running our lives on a day-to-day basis. Whether you want to acknowledge it or not, you are experiencing not only unique triggers as you get more experience, but you're also experiencing familiar triggers. And the programs that you have put into your subconscious mind, the meanings and beliefs behind those triggers equal your output. And that could either be for good or for bad. The question is, how do we take conscious control and make our programming good? Give us programs that serve us. Let's go one level deeper so you could really understand how programs are made. We write subconscious programs through the following two ways. Number one, you're probably familiar with, which is repetition. Repetition helps us master motor skills like playing an instrument or driving a car. If we do something enough, eventually we get muscle memory and we just kind of absorb it. This is actually the slow way to create a program. The fastest way that we write programs that either works for us or against us is through emotional signature. So what does that mean? Well, the emotional intensity of an experience tells the brain what's important to remember or make into a subconscious program. Think of it like this. The more emotion that you feel, the more you're going to remember that exact moment. It's going to have an imprint on your mind. This is why you can remember getting an award or getting in a fight or going through childbirth or any other significant experience in detail, but you can't remember what you had for lunch yesterday. It's because those other events were highly emotional. We felt a lot during those events, whereas eating lunch, maybe unless it's like a really, really good lunch, but for the most part, you really don't care. You'll have lunch tomorrow and you won't care about that one either. So the emotional intensity is what writes programs much faster, and this can happen immediately. Briefly looking at our example to the right, we can see how emotional signature affects our beliefs and our meanings that we form in our life. We have the unique trigger or external stimulus that happens that commands our focus. Then we think thoughts and words. We form pictures in our mind. We try to figure out what associations this reminds us of, which causes feelings. We jumble all that together, and then we come up with that meaning or belief for good or for worse. The peak emotional energy that we experience while you're coming up with that belief is what makes it strong. You could think of those that suffer with PTSD because they went through something traumatic. If it had never happened to them before and suddenly they're feeling this heightened, terrible emotion, you could see how this immediately can create a trauma program in their subconscious, and then they struggle with that for a really long time. So something to think about is that if you go through any heightened emotional experience, This busts your brain wide open. You are looking for interpretation or meaning for that experience. What you put in your head at this heightened emotional time is going to have a deep, profound effect on your programming. So you need to be very careful when you're in an emotional state that you don't entertain thoughts or meanings that can harm you later on. You want to try to find the positive in every situation if we can. And you also need to be very careful who you talk to or get advice from when you're emotional, because they may or may not be putting programs in your head that will serve you or make it worse for you over time. The point is, when you are emotional and you're trying to find meaning in a situation, you need to be very careful of what you allow into your mind, because at that very moment, you may be writing a new program that will stick with you for the rest of your life. Now the question is, as traders, how can we use both repetition and emotional signature to create the programs that we want? The key is to create an easy win strategy that is strictly designed to engineer good experiences, good habits, and positive anchors associated with trading itself. So how does this all work? We have an easy win strategy, which gives us positive progress, and that equals a platform of confidence for positive anchoring. The goal is not to make tons of money initially. The goal is to write or rewrite the subconscious programs necessary for consistent, successful trading. Once the new programs have been written, you can scale up your earning power from there. So in this strategy, it's not only going to have repetition, meaning we're going to be continually executing within best practices of good trading, but when you win, you're going to build confidence and you're going to celebrate. So we're not only getting repetition of good habits and best practices, but we're getting good emotional signature that's going to have a positive, self-reinforcing feedback loop that's going to turn you into the trader that you want to be. Now let's talk actual strategy. How do we create this easy win strategy I've been talking about? Well, the strategy must allow for a very high win rate while respecting the unbreakable rules of successful trading. So we want to win. We want to experience a lot of wins so we can celebrate, but we want those wins to be achieved within following best practices. And those are those unbreakable rules. What are they? Number one, trade and trend. Number two, get a quality entry, or to the best of your ability, get a good entry within best practices. Number three, use good risk management. Don't bet the farm on any one single trade. And number four is time in the market. Yes, as traders, we are very interested in timing the market. Unfortunately, we're not going to get it right a lot of the times. So what's going to keep you in the market so that you can see a payday in most of your trades? Time in the market. How do we get time in the market? We stay away from our pain threshold. Remember in previous lessons where I talked about market psychology, I talk about our pain threshold. What does that do? It causes us to close our trades prematurely. The moment we feel the pain of loss, we want to do what? We want to get out. So what do we need to do for an easy win strategy? Stay far, far away from that pain threshold, because 95% of your trades, even when you're breaking rules, will show you a profit at some point. So we are going to trade in best practices, trade and trend, quality entries, good risk management, time in the market when we don't time the market perfectly. How do we get more time in the market? Here's the secret. Low emotion position sizing. It's the initial low position sizing that's going to allow us to have a lot of easy wins by staying away from our pain threshold. When we get those easy wins, we get in the money, you're going to book them. And what are you going to do? You're going to celebrate. We're going to have repetition of good trading within sustainable best practices. And then we're going to lock in those wins and you're going to celebrate. That's how we are going to fix your brain and turn you into a good trader. Here's an exact strategy that you can use to not only just crush the market in general, but to implement everything that I've taught you up until this point. This is what we call the basic strategy at Trade ATS. I've been teaching this since 2013. It's extremely effective. It's a 2 time frame approach. In this case, we're going to use the weekly chart as our directional bias, meaning this is controlling the direction in which we trade. and we are only going to trade in that direction. We can see that the weekly was confirmed long at the bottom when these candles went blue. So at the moment the candles went blue, we are only looking to buy the market. Then we combine that with a lower time frame chart, in this case, a 1 hour chart. Then we are looking for what we call the master pattern cycle. I have a bunch of videos I've done on this. I'm not going to go deep into that, but basically what it consists of is defining fair market value. This is where buyers and sellers had previously agreed on a fair market price, and we use that essentially as a pivot point to trade either above or below in trend. So in this case, our trend is going up, meaning we want to trade below value, or we want to buy something that is undervalued in a rising market. So we're only going to take long trades in the higher time frame direction under value. What's most important is to give it plenty of room to pay you. Remember, it's an easy win strategy. We already know the weekly flow of money is going up. We just want to take wins at value. We're not looking to knock it out of the park. We want to take easy wins, and we want to celebrate so that we can really put it into our subconscious mind, not only good habits, but we can start to overwrite that old bad programming. We recommend that you trade 1/5 your normally comfortable total lot size. So an example of this, if you have a smaller account, would be maybe you normally want to trade $10 a pip or one standard lot on Euro USD. That's your max position size, and you're really leveraged up on your small account trading that. You would want to break that into a $2 a pip. I know, you're like, well, that's so little. How am I going to make any money? The point is to not make money right now. The point is to win. You want an easy win strategy. We want to book profits and write good behavior into your subconscious mind. So most trades you could start at a 1-to-1 risk to reward ratio based on the distance to value. If we have fair market value defined and we are now deviated below fair market value, you can measure up to fair market value from where you're entering and then measure that same distance far, and you could start your risk to reward there. There you always know you have a 1-to-1. But the key here is also being able to layer into the trade. Since you're trading that initial position size so small, you can always add other small positions to it. So you're now building a creative position, averaging into a good situation in the market, all coming back to fair market value where you can close out that trade and take profits. So again, this is about building confidence and positive anchors. It's not about making big money yet. You want to use this process, trading in trend, under best practices, using low emotion position sizing to book trades. Take them when they get back to value. Take it out of the market, book the win, and celebrate. Do it over and over and over again. Not only will you find you will literally be a positive trader, but you will be building confidence and building great habits all at the same time because you are trading in line with how the banks make their money, and you are getting rewarded for that good behavior. So what's the takeaway? You cannot win in trading long-term without a winning mindset. It's absolutely necessary. Your mind is creating programs with or without your guidance. If you choose to take conscious control of your programming, you can create programs that serve you. If you're struggling with overtrading, breaking fundamental rules, and general bad performance, you may want to consider doing a program reset on your mental game. And this lesson teaches you everything that you need to know how to do that. It's really just about you making the choice that you want to implement these practices and start becoming the trader that you really want to be.